We'll be going over IRS Form 8906, Distilled Spirits Credit. So this is one of the a component of the general business credit that a lot of taxpayers can claim on IRS Form 3800. This happens to be one that applies to wholesalers of distilled spirits. So this tax credit helps to offset the cost of financing for taxpayers who have paid excise tax to the federal government for distilled spirits, but then still have them in inventory because they have not been purchased yet by consumers who ultimately reimburse them for the excise tax. So this tax credit applies based on the number of total cases of distilled spirits that were in inventory during the tax year. So we'll go through IRS Form 8906 in just a moment, but there are a couple of key points here that are worth discussing. So first is the eligible taxpayers. And you can see in the form instructions that eligible wholesalers are any taxpayer that holds a permit under the Federal Alcohol Administration Act as a wholesaler of distilled spirits and is not a state or a political subdivision. So it's not like your state government run ABC liquor store. It's a private taxpayer entity that has a permit to be an eligible wholesaler. Or if you're not an eligible wholesaler, you could still be subject to Internal Revenue Code Section 5005, which applies to the distilled spirits and specifically the excise tax that wholesalers have to pay for distilled spirits in their inventory. So you can find the exact calculation of that of the tax financing cost in Internal Revenue Code Section 5011, which actually kind of breaks down the detail of how that calculation is derived. So that's the other thing. The average tax financing cost per case is the amount of interest for corporate overpayment rates based on the excise tax and prevailing interest rates. So the Internal Revenue Code uses a 60-day holding period. The assumption is that if you're a wholesaler and you have distilled spirits in your inventory, your average turnover should be about 60 days, and the cost of the average tax financing cost per case reflects the reimbursement for that holding period. So we'll go through this form. At the top of the form, you'll enter the name of the taxpayer. So we'll just use our taxpayer, our hero, John Doe. He owns a company called the Doe Distribution Company, and his company has an employer identification number, and it is an S corporation, which we'll get into in just a moment. So let's just imagine that during the tax year they processed 10,000 or had 10,000 total cases of distilled spirits in their inventory. So because not all liquor has the same definition, the federal definition of a case is 12 80 proof 750 milliliter bottles. So for any lot of distilled spirits that does not consist of cases of 80 proof 750 milliliter bottles, you have to do a calculation of how many cases your lot represents. So there's a three-step calculation. You divide the number, you divide the number of liters in the lot by 9, and then you multiply that amount by a fraction where you use the proof as the numerator, and then the denominator is 80. So 150 proof would be 150 on top, and then 80 at the bottom. And then the stated result is the number of cases in the lot. So the form instructions do have an example. Let's imagine that you bought a lot of 90 500 milliliter bottles of 150 proof rum. The total number of liters is 45 because you would multiply half a liter, which is 500 milliliters, by 90. So you get 45 liters. And then you divide that by 9, and the result is 5. That represents your total number of cases. You multiply that 5 by 150 divided by 80, and so you have 5 cases of the 150 proof rum. That translates into 9.375, which is the number of cases in your lot. So that would be the number that you go into number 1. So I'm just inserting a number that reflects, Doe Distribution Company, what they did during the tax year, and then we're going to simply multiply that by the average tax financing cost per case. So you get $845.60. That would actually probably round up on a tax form to $846. Line 4 contains any distilled spirits credit from either pass-through entities such as partnerships and S corporations. So if your company or if you as an individual are a shareholder in an S corporation or you're a partner, then you would receive this credit reported on your Schedule K1. So for partnerships, that would be on K1 of your Form 1065, box 15, marked with code P. And for S corporation shareholders, this would be reported on your Schedule K1 from your Form 1120S, box 13, code P. So let's just imagine that the distribution company received $1,000 of spirits credit from partnerships and S corporations, and then we add those on line 3 and 4, and we get $1846. So for partnerships and S corporations, you'll report this amount on Schedule K, and then that will flow to all of your partners and S corporations through their respective K1s if there's any excess credit. Then all other taxpayers would report this on IRS Form 3800, Part 3, Line 1N. If you did not have to complete Line 1 and you don't have anything for Line 3, then you don't, if the only item that you're reporting is a credit that was passed through from a pass-through entity, then you don't need to complete IRS Form 8906. You would simply report this tax credit directly on IRS Form 3800. In Part 3, Line 1N, you would simply take this $1,000 tax credit and you would report it in that respective line. That's all we have for this tax form. It's fairly straightforward, but if you want, we wrote an article where it breaks down some of these concepts a little bit more clearly. Simply go to our website, teachmepersonalfinance.com, type in IRS Form 8906, and you should see our article. If you like our articles, please subscribe to our newsletter, and if you like our YouTube videos, please subscribe to our YouTube channel. If you have any questions or comments, please post them in the comments section. Thank you very much and have a great day.